One must make the warrior walk his everyday walk. Miyamoto Musashi. How does that apply to us? That means that every day we have to spend time in the market, working it like we are the traders and investors we wish to be. How do we do that? We practice trade. We have the mindset of a market warrior every single day. What is that? That is the mindset of determining which direction each and every stock or ETF we are tracking is going to go. Looking at it from every direction. That means the 4-hour, the 2-day, and the weekly chart. As we train once a week on Wednesdays, we ask you to look back and take a broad market view. At the end of the week, of course, we look at what occurred over the course of this prior week and where things may be going in the coming week. This is the comprehensive review and forecast. We have a special training for all of you who are subscribers. I do encourage you, if you're not a subscriber, become one. It is easy to do, and we want you to do that. This special training is going to be on the price percent oscillator. It's our master indicator. It will be attached, and we do want you to join us. I am still traveling, so there will be some background noise. You might hear jets, voices, maybe a dog barking. Thank you for your patience. We're going to jump into the market now. As we always start, we start with the weekly chart. The overall view is everything is up for the day on Friday. Nice day, and look at the beautiful crossover that we had all the way back on the 28th of June. We've completed the 4th week of up movement. We look at the price percent oscillator. It is actually spiking higher. Derivative oscillator gaining upward momentum. Markets continue to push higher. High of the week, 302.23 on the S&P 500. Prior week, 301.13. Not a lot of gain, but it is continuing to go up over a dollar and something, maybe $1.10 or so. So again, market is continuing to push higher against perhaps all odds. But again, as you keep printing money, lowering interest rates, what do you expect? It's called inflation. Now we go from the 2-day chart, and of course we want to use that to our advantage. From the weekly to the 2-day, and of course this latest 2-day candle is now complete. And it's a pretty decent up candle, again, up to 302.23, the prior 301.44. So again, decent candle, a green up candle with a wick on top. A little bitty wick on the bottom. That typically connotates some weakness. We don't want to see bottom wicks in a strong uptrending market. Price is above the 2-day, is above the weekly. Price percent oscillator, which was heading toward the red signal line, is pulling away. Derivative oscillator actually gained a little bit of momentum, so it didn't turn red on us. We go to that 4-hour chart. Of course, it crossed over in the afternoon back on Wednesday. Did not give us a jumping in point, a good one on Thursday, but actually did on Friday. Now, again, what do? Check the market around 10:30 or at noon. Some jumping in point somewhere around 1:0. Let's see, opening was about 362, something along. And again, I'm using Heikin-Ashi candlesticks. Not the best thing to start talking about jumping in points and all, but somewhere around the noon mark. Now, what do you do with that jumping in point on a practice trade? If you think the market's too high and is really, really sketchy, then of course you don't do a practice trade, but I would encourage you to do one. Take a look at the weekly. It's moving up. Take a look at the 2-day. It's pulling away and going higher. So again, you've got things to your advantage on that. It is the summertime trading zone. I know it is a crappy time of year. But again, if you can successfully make moves this time of year, we get on that fall-winter trading zone, you're going to feel great about it. Let's go to the Qs now on the weekly chart. Continuing to move up for us, and for some reason our lines aren't drawn. We're going to reload quickly and let that pull up for us. Hopefully our lines for the Qs is going to pop back in there. But we see that the Qs is also continuing to move up. There we go. Sometimes you just have to do that. I encourage you, when you're not getting the things you've already drawn in there, just reload. I rarely have to do that. This is TC2000. The free version is freestockcharts.com. We have a 25% discount. Look for the link in the show notes if you wish to subscribe. I think it's the best out there. And what do we see going on? Well, we see price movements just barely above the old 2-day on the weekly, is above the weekly, and in fact we're going to redraw that trend line a little bit with the week closed. The derivative oscillator gaining momentum, price percent oscillator is heading up. We go from the weekly to the 2-day, and of course we can see on that 2-day chart it is trying to move up. We have a fully drawn 2-day candle higher than the prior, above the 2-day trend line. Price percent oscillator heading up. Derivative oscillators gained a little bit of momentum. Go to that 4-hour chart. What do we see there? Up in the morning, jumping in spot for up in the afternoon. Hopefully you're giving yourself a practice trade on one of those two possibilities, on either the S&P 500 or the NASDAQ 100. And again, this is all about learning. What do we see going on TLT? Well, it closed the week with a green spinning top, means indecision tending up. Tell you, friends, that is a hard one to call. It does appear that the weekly has pushed through and passed over going down. I would encourage you to, again, this is the closest it's gotten. We've seen, well, I mean, it's not the closest it's gotten, forgive me. It does appear to have crossed over. We had the same thing happen back on the 3rd of May, the week ending then, and then things pulled back away and pulled back through. That could happen to us. Keep an eye on what goes on the market on Monday, but we're going to go ahead and call it a weekly vertical crossover going down. TLT was up for the day on Friday, 0.24%. We'll see how Monday shapes up. If Monday's a booming up day, we could see things bounce off that red signal line, but for right now, we're going to call that, because I do see blue apparently passing through red. And we also have the derivative oscillator has gone red on us also. Now, it did back on the 3rd. It actually, of May, it also did back on the weeks ending the 8th and the 15th of March. So again, remember, we had that crossover all the way back at the end, going up, all the way back at the end of October of last year. So we'll go ahead and call a weekly vertical crossover, see how that works out for us. We go to the 2-day chart. What do we see in bonds? We see that things had really hammered down for Wednesday and Thursday of this past week. That, again, that was on the that's on the 2-day chart. So that's actually Tuesday, Wednesday, the 10th, the 9th and 10th. And then we saw that happen on the 12th. That would be Thursday and Friday. We saw it again on Monday, Tuesday. So we had 8 days of down movement, not 2 days, 2-day candles. And then we saw 4 days of up movement, and then things sort of starting to roll over again. Price percent oscillators consistently stayed down. Derivative oscillators losing some downward momentum, but is pretty strongly negative. So again, we'll continue to monitor, watch, see what there is to see. It's really hard to get much of a trend line now, but we'll give that a shot. We've got to remove our long in the tooth weekly trend line since we've had that crossover going down. Weak as it may be, we'll see how that pans out over the course of this next week. The 2-day chart, of course, we had, the 4-hour chart going from the 2-day to 4-hour. We saw an up movement in the morning and then a bit of a peel back in the afternoon, again up 0.24%. Price is below the 2-day trend line. So we're now going to go to our last chart, which is gold. Gold up a little bit for the day, but again, a really slow week. A red open box candle, meaning, of course, caution, indecision in the market. Not a solid red down candle, but just one of those candles that shows much slower movement. Price right there on the weekly trend line. We see that the price percent oscillator flattening, derivative oscillator losing upward momentum, but still in a confirmed up move. 2-day chart is different, of course. It crossed over going down back on the 2-day candle ending Wednesday the 24th. And then, of course, Thursday, Friday, down moves, derivative oscillator gaining downward momentum, price percent oscillator crossing over, going down. So we don't have a trade in gold at this time because the weekly's up, 2-day is down. We go to the 4-hour. 4-hour continues down. It's been going down since the market peaked back on Thursday afternoon, the 18th, and then it sort of rolled off until then, hoping for a jumping in point, but haven't had one over the last many days. Price trying to penetrate, hasn't quite yet penetrated the weekly trend line. So keep our eye on things, see what there is to see. Keep in mind opportunities for jumping into both the S&P 500 and the Qs, the NASDAQ 100 over the course of Friday. And then, of course, we see that we have a weekly vertical crossover going down in bonds. We'll be sending that out on the text today. That's where we are, folks. Again, this is not an easy time of year to trade. It is a summertime trading zone, but you need to go through it and understand it. There is that adage, sell in May and go away, live to trade another day. You may make that decision later, but at this time, please continue to keep training with us. We're coming into the fall-winter trading zone here in a few weeks, and things are going to get so much more beautiful. So, thanks for being with us. You hadn't purchased our book. You want to support the work we do. You want to supercharge your training, learn how to create your own money printing press that you're going to do virtually to begin with, then you need our book. It is available. Look for the link in the show notes. You can find that YouTube. You can find that, of course, if you are a subscriber to our daily market review, where you get that training every day. That is free. Just go to chartingwealth.com, put in your name and email address. We'll put you on the list. If you also are listening to us as a podcast, audio or video, you will see a link in the show notes for our book. My friends, always great to have you with us. God bless. All the best from the whole team here at Charting Wealth World Headquarters.